Today we're looking at China because their equity markets are down once again, even though the government has tried to step in. We're going to check out what's going on there. And then today's Trading Takeout is going to be why you shouldn't pay attention to strategists at big investment banks. Overnight, we have seen China take a massive hit to their equity markets. And it does look like the national team, I think they're called now, has been involved as well. So we can have a look here. It's probably better to see it on the daily, actually. The Shanghai Composite had fallen over 3%, just over 3% over the from the open till the actual low, and then it was bid back up. So the close was actually down only about 1%, I believe. If we just measure it here, if I can ever use the tool properly, let's have a look. So yeah, it was down 60 basis points roughly. So yes, there was considerable movement to the downside in China, and I've mentioned this just last week as well. Now, the reason for this, I think, is the market is just fighting back against this political meddling, if you like, political meddling in China with regards to this national team. I'd mentioned that the market would view it as sort of like fake buying. There's no intent behind it. They know that it's not going to be a sustained period of buying. There's no real support under it. And it's very different to what, say, the Fed does or other central banks, whereby they actually manipulate the risk-free rate of return to create the adequate opportunity cost of not investing in equities or risk assets. So it's a very, very different context in my view. Now, the way that we should be looking at this is more, okay, are there spillovers into the US? Are there spillovers that could occur here whereby we are going to see US equity markets get hit? And there's an interesting thing that I'm going to get onto in today's Trading Takeout, actually, which is to look at what a contrarian signal could be. But the main things here that I would be looking at is, to what extent is it really that this is a demand hit within China? Are they just not making stuff? Is this, reminiscent of a broader global issue to do with an economic downturn, which, by the way, doesn't necessarily mean anything for equity markets. It doesn't necessarily mean a thing for risk assets. And so the way that we have to look at this is, okay, let's see if we can spot something that's going on, and let's see if we can manipulate that to our best advantage. And what I mean by that is, what is the best trade coming out of this? Because the best trade is not always the most obvious trade. And it's not obvious to me right now as to what that best unobvious trade could be, if that makes sense. But I think we're going to get there quite soon. It could be something to do with bonds, but not to the upside. It could mean that we see a bit of an acceleration in inflation again. That would be the one big risk that I'd be looking at. And that's purely because of the labor market dynamics. But again, need a little bit more time just to get to grips with that theme. One thing to potentially look at, and I'm not sure actually if Axie offer it, but is coffee. Okay, and coffee is a market that I actually really, really like. And the reason for that is because every single time that I've had a half decent idea on it, it has been because it has lagged other commodities. It has had its move a little while after. Now, if we add cocoa here, and this is totally, tangential to anything that I've just spoken about. This is just something that I think is kind of interesting. If we look at cocoa futures, okay, cocoa has had its run already to almost all-time highs, actually. So if we are taking that perspective of, okay, coffee tends to lag other softs, then we can maybe say that coffee is looking for an increase as well. But it's quite a niche product. Not a lot of people have access to ICE futures, but it's something interesting to look at. And if you do have access to it, then, maybe have a look at it. Make sure your margin requirements are in line with your appetite, though. But yes, I think that the China story is at the moment contained to China. I don't think there's any spillovers, but the economic effects of China could have issues outside of China rather than the market directly. Here's a great reason from today's Trading Takeout why you shouldn't necessarily trust the big strategists at all of these investment banks or other places. And it's because they are strategists at the end of the day. Now, Mike Wilson was the CIO, so Chief Investment Officer at Morgan Stanley up until like last week. And he's been notoriously well known for the last few years for completely mistiming the market, or timing the market if you want to take it as a specific trading signal, but in the wrong way. So basically he is saying that, he'll come out and say, if we go here at this picture, he'll say sell any stock, market bounce, and the market rallies up to 4,600, the S&P 500. He says traders are being fooled as the market had dipped. Oh yeah, then it just goes and rallies again. He said, I was wrong. Wilson capitulates at market top and then it collapses. And then the cracker from the end of last year was there will be no year-end rally. The market rallies from 4,100 all the way up to 4,300 in the matter of 3-4 weeks. Don't listen to these guys. Seriously. Anyone who's paraded around on CNBC or Bloomberg, Bloomberg not so much, but CNBC definitely, it's much more entertainment focused, I wouldn't pay attention to, or at least I would, but not for the reason they want you to be watching. I would pay attention for them being more of a contrarian signal, because you have to ask why they're going on to CNBC. It's very different for me, for example, going on as someone who would make content online. I would maybe want to get a slightly bigger audience, whereas these bank guys, you just have to really understand sort of why they're doing it. It doesn't really make sense for me, but generally strategists anyway, they're not traders, and so they can completely mistime the market because they're not looking at the same metrics as an actual trader would do. They're not looking at things probabilistically, and also the simple fact is that they're not backing their views with their own money. So yeah, pay attention less to these guys with massive authority.